Hello, welcome to this week's Fundamentals. My name is Thomas, I'm the host of this channel. This week I want to discuss a very interesting article written by the Chief Content Officer of Coindesk. So in this article he explains 6 reasons why we should be optimistic about the current bear market, or the crypto winter as they also call it. So with that said, let's jump into this week's video. So this is the article regarding 6 reasons to be optimistic about the upcoming crypto winter. So a winter is when we are seeing prices going down for a while, also called a bear market. I will add a link below that you can look at this article yourself. So it starts off with layer 2 scaling systems no longer just an idea. So what is a layer 2 scaling system? So blockchain, when more people join the blockchain and more transactions take place, this assumes that the blockchain gets slower. So layer 2 solutions are solutions that keep the quality of this blockchain. And in some cases, like Solana, the more it scales, the faster it becomes. So the more people join the network, the faster and the better the blockchain becomes. Whether it's the Lightning Network for low-cost Bitcoin payments, the ZK rollups that power decentralized finance applications, or multi-party computation projects enabling secure online custody. Layer 2 mechanisms use clever cryptographic to enable off-chain computation that can't be gamed and which, after linking outcomes back to permissionless blockchain, don't undetermine its decentralized consensus. So what it means, off-chain? Off-chain means that, for example, between us, we have a balance where we keep doing transactions. And after a week or after a month, we decide that, hey, the difference between our balances, so our balance and the difference between what I paid and what you paid, we update on the blockchain. So it takes the transactions off-chain, and once needed, we can update the blockchain. And therefore, all the transactions that we do between us don't have to go over the blockchain. And if Ethereum developers can successfully migrate the blockchain to the full suite of the 2.0, which we're all really hoping for that it happens soon, even bigger scaling gains will soon be made by crypto ecosystem. So even though the prices are going down into crypto, innovation keeps evolving, and this layer 2 solutions make crypto even better than it was before. So permissionless models are really winning. Thanks partly to the technology improvement described above, recent crypto success stories are concentrated among permissionless projects open to any participants, rather than the permissioned projects once favored by incompetent players. So the decentralized applications, which is the video that I did before this one, it's really booming, and there's more and more interest. More and more people are jumping into DeFi to get a passive income. More and more people borrow money in crypto, or use applications, are mining, are providing nodes. More and more people come into the crypto space. This means that permissionless is winning. Blockchain is winning. The money that's being made in DeFi, non-fungible tokens, NFTs, and decentralized autonomous organizations, DAO, not so much in IMB's once prominent enterprise blockchain offerings. So IBM was actually one of the first companies that decided to make a blockchain for companies. So this is a more centralized way of blockchain where companies still have the control over it. We don't hear about it anymore. So it's not really growing. It wasn't a success story for them, unfortunately. Then the third reason, corporates and financial institutions are here now. We know that financial institutions are here now, but what keeps them staying in the industry? I will explain that now. So thousands of mainstream firms are experimenting with NFTs, social tokens, especially those in entertainment, fashion, media, such as Adidas, Warner Brothers, and New York Times. One mark of this says about the sector's future growth came in separate earnings calls this week, when Satya Nadella and Tim Cook, the CEOs of Microsoft and Apple, respectively, both crowded over opportunities in the metaverse and pledged to invest forcefully in it. So why is the metaverse so important for crypto? So the metaverse makes everything digitalized. And in order to do quick transactions there, the best way is to use a digital currency. It's just the fastest way to do transactions in the metaverse. The engagement in crypto among hedge funds, family offices, and even pension funds surged last year, so they increased last year. Even if they've sold a lot of crypto of late, institution investments in the technology, staff, processes, and legal acquirements needed to enable those investments now stand as a base of the established infrastructure for handling future transactions. The institutions aren't leaving. So, in order for the institutions to be able to invest in crypto, they have to put certain people in place, also processes, also legal requirements. Also, governments have to allow it. So that took a lot of work. So that is not for 1 year to jump in and jump out of crypto. Like, these processes are set in place for future investments. So the institutions that are investing, most of them will stay and will even increase their buyings into crypto. Then the next reason is regulation implies normalization. That although we don't really want to have regulation because we're afraid that the government will tax us or they will check everything, like it becomes more centralized, they will have more control. But it also means acceptance, because the other side is that the government could also ban stuff, which is the opposite of acceptance. So while the crypto community was understandably upset by some poorly worded amendments to a US infrastructure bill that resulted in overseas tax surveillance of crypto service providers, the law also effectively legitimized the industry. If a government wants to tax a sector, it won't kill it, as I just explained. So regulations remain a barrier to innovations, adoption, and growth, particularly the onerous nature of anti-money laundering rules and security law enforcement. But it's also a framework for normalizing the industry and for making the general public feel more comfortable with it. So once the government is legalizing it, it also means that people that are doubting about investing in crypto because it's too risky now actually feel comfortable to jump in. So for many reasons, regulation is actually a good thing. Then the last reason is this wasn't all crypto's fault. So the mad 2017 token price jump, so this was the last bull cycle, and subsequent collapse in 2018 was largely endemic to the crypto sector. It was stoked by investor mania for ICOs, so initial coin offerings, and by blind belief in untested ideas of founders who realized billions of dollars on flimsy white papers. So the last bubble was really created by ICOs, so initial coin offerings. So people would offer a lot of ideas, a lot of future gains that were based actually on nothing. The same is like happening now in NFTs. There's a lot of people and a lot of projects saying this NFT is going into the metaverse and we're going to create all perfect metaverse. It's going to be very valuable. But these are just ideas. Like, it's not backed by anything. They probably don't even know how to program it that way. So the NFTs are in the current bull market, and the last time it was ICOs, so companies or decentralized protocols that came with a lot of promises and actually didn't catch up on it. So the current situation, so the current bull market, or the current market we are in, is quite different. While extensive enthusiasm for new tokens contributed to the unsustainable price rallies, crypto's ballooning market capitalization was also fueled by unprecedented fiat monetary expansion as the central banks pumped trillions of dollars worth of quantitative easing into the global economy. So quantitative easing means the money printer, so adding money to the supply. As central banks pumped trillions of dollars worth of quantitative easing into the global economy to soften the impact of the pandemic-fueled global recession. That for fight of dollars, euros and yen followed into the risk assessment, stocks, commodities, real estate, fine art, and significantly, cryptocurrencies. Now they're all paying the price for an inevitable inflation problem, which is prompting in the US. So besides the fact that the government also printed a lot of money, we also have the problem with like the increasing gas prices, the increasing oil prices. So inflation is inevitable. So also the current bull market also broke down together with the tech stock bubble. So crypto is not alone going down, it's actually the whole market is going down at this point. And this was different in 2018. So that was it. That was the end of this article. I found it particularly interesting. I hope you too. Please, if you like this content, please like and subscribe, and let me know in the comments if you would like to see these type of videos more often, because then I will do news articles more often. And I hope to see you next week. Bye.